It's been a testing couple of months for Noble Group, which has seen its business model questioned by anonymous research groups. I asked Yusuf Alireza, Chief Executive of Noble, about his experiences and his promise to improve transparency.
So I think there's two challenges that Noble faces. One that's unique to us and one that frankly is industry-wide. The one that's unique to us is that we are the only listed, rated, assets-light trading company. So obviously when we announce transparency, when we announce our quarterly results, that's not matched by the transparency or the quarterly results that our private competitors don't have to provide. The second challenge that frankly is consistent across our entire industry is our industry is not simple. There's no level of transparency that will make it simple. Right? Now, of course, it's not as complicated as some of our detractors would like people to believe, but it's not simple. We're not a widget producer. So if you think about it, there are certain parts of our business in terms of how we make money that are simple. So we move the physical commodity from the producer to the consumer. We manage the market risk, credit risk, and operational risk associated with that. As part of that, you have a fixed margin or a percentage margin that you get paid. Well, that's simple to explain. Right. The part of it that's more complicated to explain is that in all of these physical contracts, you have embedded optionality. And part of what we do is extract the optionality that is in those contracts. So throughout the last 2 months, we've obviously interacted. I personally have interacted a lot with every single one of our key stakeholders. So our banks, our shareholders, our bond investors, our rating agencies, obviously our independent board. And we responded to any of their concerns. And frankly, I've been very pleased by the kind of support that we've got from all of our key stakeholders.
Can we just now turn to the business? I mean, the balance sheet has been pretty much sort of transformed, I guess, with the COFCO deal that you've done. How are you going to deploy that capital? I mean, is a buyback an option, or are there more exciting opportunities in the market at the moment? We've obviously seen a big sort of dislocation in oil prices. I mean, are there exciting opportunities for Noble to deploy that capital?
Myself and the rest of the management team, and frankly the entire board, came into this year feeling that this was an opportunity-rich environment and that Noble was very well positioned to capture those opportunities. Right? You talk about the balance sheet, which is a very fair point. Our balance sheet has never been more liquid, never been more deleveraged, never been stronger. So we have a debt-to-capitalization ratio of 38%, and our liquidity headroom is in excess of $5 billion, which is more than enough to cover our entire debt. But the COFCO deal wasn't only transformational for our balance sheet, it was also transformational for the company in terms of the simplicity or the complexity of the company. If you think about it, if you look at it, Noble before the COFCO deal, before we basically spun off our agri-business, had 15,000 employees. Now it has 1,800, 1,900 employees. We had more than 60 offices around the world. Now the majority of our staff are in 6 offices around the world. We also had a lot of industrial assets. Most of those industrial assets are now part of our agri-business. So it's not only our balance sheet that's been transformed, but it's also the complexity of the business, and our business is much more focused and much easier to manage.
Sure, but I mean the COFCO deal, I mean aside from the simplification that it brings with Noble Agri, I mean can you explain a bit more? I mean, what other opportunities will that bring that you're partnering with, China's biggest grain sort of importer? I mean, what does that bring Noble?
I think it's simple. I think we basically have as our partner, as our investor, as one of our largest shareholders in Noble Agri, the largest client in the world. Right. So when you think about the strategy of partnering with best-of-class partners, COFCO is the largest downstream player in China. And we share the vision with COFCO, but also with Temasek, IFC, Standard Chartered, Hopu, that are all shareholders in Noble Agri, to build one of the leading global agri-businesses. Right? A global international company, but a company that has an Asian culture and is based and is one of its strategies is based on being the partner of choice for the growing food demand in Asia.
I mean, and do you envisage that business growing and potentially being IPO'd, I don't know, 3-5 years' time, perhaps?
I think the strategy that we've indicated to the market is the company is obviously starting off as a private company, will grow as a private company, but eventually the goal would be it would be a public company, and we would IPO it at some point in the future.
Okay, and just some final questions just to wrap up on markets. I mean, I have to ask this just about the oil price because everyone's talking about it. Do you think the price has bottomed now for oil?
So I think what I'm about to say is applicable to the oil markets, but frankly to all of the commodity markets. There's plenty of reasons to be bearish, to continue to be bearish about the commodity markets, right? You have an environment where the dollar is appreciating, right? You have an environment where cost curves are falling, and you have an environment where most of the commodities are oversupplied, right? So from a fundamental perspective, it's hard to be positive or bullish on the commodities markets. With that said, if this year is yet another bear market in the commodities market, it will be the 5th year in a row where you have a bear market. And I think that would be the first time in the post-World War II period where you've had 5 consecutive years in a bear market. So having been, in many markets in the last almost 25 years, when the market and sentiment is the most bearish, I'm looking for information that may be bullish. And when the market and sentiment is the most bullish, I'm usually looking for information that may be bearish. So I think, if you just look at the fundamentals, you can argue that you should continue to be bearish. But sentiment is very, very negative. And we have been in a bear market for, now going on 5 years.
Okay. Yusuf Alireza, thank you very much.
My pleasure, Neil. Thank you.